So this is a perfect, I think, counterbalance to what I was talking about earlier today. And remember the adaptation circle of life, which is technology, process, purpose, and people, or psychology. Technology obviously is a critical piece of the equation, and this panel is all about delving into technology and delving into the specifics of digital banking and how to realize the potential of digital banking. The panel is august, and I'm going to introduce them in just a second, but I want to just lay some ground rules before we get going. We want to make this as interactive as possible. I've never been on such a large panel. And so we're going to interact among ourselves. I'm going to ask each individual, or in some cases two people, to talk about certain things, but I've also asked the panelists to interject by raising their hand, to offer a counter opinion, even get into debate would be great. And at the end, near the end, we will open it up for questions, which the panel will then answer. So again, as interactive as possible, and if we're really radical, we might even have a little break about halfway through. I'm not 100% convinced on that, but we'll see. So let me do the intros. First and foremost, I'd like to welcome Mohamed Assem, the Transformation Strategy Head for CIB.
Thank
Mohamed.
you.
Second, sitting next to him is Islam Shawky, who's the CEO of Paymob. Welcome, Islam. Aza Al-Shinawi, Head of Egypt, Amazon Web Services. Thank you for joining us. And Sherif Elbehery, thank you for being here, Chief Executive Officer of, did you say Misr? Misr Digital Innovation. Lesley is with us, Lesley Denyes, who's the co-lead of Digital Financial Services Practice Group with IFC Advisory Services in the Middle East and Africa. Say hello to Lesley. And then last but not least, Ahmed Atef, the Senior Director of Market Development for Fintechs and MNOs for Visa. Welcome. Welcome, everybody. So I want to, in the spirit of dialogue versus monologue, I asked Islam and Mohamed if we could start the panel discussion with the exploration of the relationship between Paymob and CIB. How it works, what's gone well, what are the challenges? One of the questions that we came up with, or that was proposed the other day, is who owns the customer, which I think is a very provocative question. So I'm going to actually just turn it over to Mohamed and Islam to talk about, give us the history of the relationship between the bank and the fintechs, and then what you both have seen unfolding, sort of the good and maybe the challenges would be great.
Okay. Shall I start? Let me start first with the history. When banks hear about fintech, what pops to the mind of the banks is, okay, they are going to take the market, there is a competition, there is some sort of future is for the fintech, and let's try to see how we are going to protect ourselves against the fintechs eating the payment landscape or the banking landscape in a few years. Let me start first with how the transformation also is taking place within the banks and within the industry itself. By banks started building their technology stack, which I think Egypt has been passing through this during the past years, of building the technology stack, which is robust enough, allowing better consumer experience and consumer journey, and started to be more into consumer centricity and understanding what are the needs of each and every consumer. And in order to start meet the customer needs and start being near the customer and provide to the customer interactions, and the bank really achieves the financial inclusion objective of central bank, which has been published a few years back, there is a need that they build also their partnership stack, because the banks are not being able to do it alone. They are not going to meet each and every customer need alone, and they are not being able to fulfill all the use cases alone. And here comes the role of the fintech, where when there is a need, there is a specific use case, there is a specific need, and the bank needs some extra value in order to be provided to the customers. Here comes the role of the fintech, and here comes the integration between the banks and the fintechs, and the future of the banks on open banking and open source and banking as a services, which are all relying that the bank will be able more and more to integrate with third parties. And one of the examples which has been a successful one, which we have seen in Egypt, and also as CIB, we have cooperated with Paymob in the acceptance space, where the merchant takes a POS or an acceptance tool in order to start accept payments digitally from the consumer. This space, the banks has been running much and for a long time without a real let's say, paradigm shift or a real tangible outcome which we have seen in the market. And when the central bank came a few years back and said, let's do an initiative for acceptance, let's start to give the fintechs the space in order to start play in this area, and banks cooperated with fintechs, I think that rarely now we go to each and every supermarket, small store, restaurant where we don't find a POS or a payment tool which can accept digital payment. Yeah. I will leave Islam to continue about the same topic and kick off. Islam.
Definitely. So first of all, thank you.
Islam, before you go, what's the duration of the how long have you guys been working? The bank and Paymob been working together?
It started 3 years back. 3 years back. Yeah.
Great.
Yes. So first of all, thank you for having me, and it's been great to be with this amazing panelists. So when we started, this was in around 2014. We had this dream of how can we digitize SMEs and help them with their payments and acceptance. Definitely, when we started approaching banks back then, it was extremely different because the word fintech wasn't like been coined, and banks didn't understand how can they collaborate with a very small company, just like less than 10 people. Capital is extremely small, no experience in banking or anything. So banks were extremely skeptical from this collaboration. As Assem was saying, first people were thinking, why should we let them in? Maybe they're going to eat our lunch. Maybe they're going to do things that we are doing because it's a similar product. So first of all, we had to invest a lot of time to explain that we're not going after the same segment. No, we're trying to complement the business. Yes, we're offering acceptance, whether it's online or in POS. However, we're going to different segments. We're not going to go to your clients and just take them from you. So this took us a lot of time to explain and to prove. The second thing was banks, because they're very conservative by nature of doing business, because at the end of the day, I want my bank to be conservative because this is where I leave my money. But it took them a lot of time to open up and to trust that we can partner with a much smaller organization, and this can be a sustainable relationship, because we had a lot of comments from our partners earlier that, I mean, you guys are very young. What if you just left the company? What if the company went bankrupt? I mean, we're going to put our name behind you. So is this something that's going to be sustainable? How can we make sure of the business continuity? Because again, our name is much, much more important than any financial gain that we're going to come from this collaboration. So it took us a lot of time, and I think only time just proved that we first were working with banks in order to offer new, as Assem was saying, to offer new products to capture more value from the client, because again, banks, especially in the acceptance, it was mostly a cost-driven approach where a bank would just sell for 2%, the other bank would undercut and sell for less, and this was the way this industry has been doing because everyone was offering the same product to the same customers. So what we're trying to do is just let's see what SMEs want and actually try to build something and actually capture more value than what what the market has been doing. And as Assem was saying, I think the industry at large have managed to onboard hundreds of thousands in SMEs in the last 3 years, and we're very proud to be one of the players that has helped this, along with acquiring banks, and we're super excited about what the future holds for the industry.
I think Sherif has something to say.
Yes. Thanks, Chris, and thanks, Dr. Abdelaziz and EBI for inviting me. I just have a comment, and I think it's a view reading the market on the acquiring business, where we can see the relationship between Paymob and CIB and other banks as well. Paymob, I think, works with multiple banks. The area before the introduction of fintechs, I don't agree that the fintechs will be eating a share of banks. It will be doing a big disturbance. But let's look at the landscape of the area where Paymob starts playing in a few years back. It was the acquiring business. Banks were competing and they were getting into a race to the bottom. It was cheaper service and lower service, cheaper quality and lower quality. And I bet any of the 6 banks that used to be offering acquiring business, and again, we have Visa and MasterCard in that event, they can tell us none of the banks were making money. None of the banks were profitable into these businesses, and that is why they were always racing to a cheaper service and lower quality. What Paymob did and other fintechs, they came into the play, they came into the game, and they started charging higher quality, better distribution on ground, and charging more. I don't think today that the service that the customers or the SMEs, which is an area that I can claim I have some experience in, they have cheaper offerings that they are getting compared to a few years back. But they have a more expensive offering, but a better quality, and customers are willing to do that. So it's not really eating from the share of the banks. I think they complemented and they close a gap that banks were not doing themselves.
Islam, you want to comment on that?
Yes, so I 100% agree that this is how a fintech should operate. So the fintech should focus on a use case. They need to focus on it and try to build something that would allow them to capture more value. Because if you're selling the same product as the bank is selling, then 100% people are going to the bank. So you need to focus on whether the proposition, whether the onboarding, the customer service. So in our logic, as Elbehery was saying, what we've managed to do is that we realized that the bottleneck in all of this is the onboarding part. So how can we decrease onboarding as much as possible? So onboarding on a POS usually took somewhere between 3 weeks to maybe 8 weeks in order to get a POS for an SME, until they open the bank account and all of this, and they deposit the whatever they need to open the bank account, get the hardware, get training, and all of this. So what we've done is that we said, how can we decrease this as much as possible? So the best thing for us, we wanted it to be less than 10 minutes. So we've invested a lot of time and tech in order to make sure to have an instant onboarding method where we onboard the merchant right away. What happened, as you were mentioning, is that first of all, the SMEs are not that cost sensitive, because they process very low volumes, so 0.2% multiplied by 10,000 is just nothing for them, just to have something working and easier. It's not like a conglomerate that's fighting for every basis point. Second is that we realized that the activity rate compared to the lower time to value, which is the time for the merchant to get onboarded and to transact. So the lower this time is, the more probability this merchant is going to be active, because they still remember how to use the device and what is the need of the device. So working on this and focusing and being obsessive about these details, it's what I think would help fintechs actually help banks and complement their service, because I don't think a bank on their own was going to focus on these very small details with these very small SMEs. So I agree 100% that it's a complementary relationship, and it's a relationship that is very sustainable as long as the fintech is delivering to the bank something that the bank on his own can't achieve.
So I have a personal question. Not really personal. How long did it take Paymob and CIB to establish trust?
Two?
How long did it take your bank and how you guys, not you individually, but the two organizations to establish trust? Because that's obviously a critical relationship.
It's a very tricky, it took long. This is the short answer which we can say, and it took long, very long, very long time.
But like months or a year? Or
No,
Months.
Islam, is that fair?
Yeah.
Month?
no.
To establish the trust
Yes.
between each other, as I mentioned, it's not the trust between the...
Definitely, I mean, for us, it took us years just to appear on the map of banks. So for us, when we had the idea and we had the demo, in order to launch our first initiative, which wasn't with CIB, it took us 2 years just to sign a deal. Because again, people were very skeptical and they wanted to see, I mean, this business continuity part. Once we delivered once and twice, yes, it became easier and easier for us to expand on these relationships. So the first one was definitely, I mean, the longest. However, to scale this, it was easier, and by delivery and by time and showing the commitment of us to what we're doing, this is definitely something that made it easier to expand step by step to other partners.
And it's very important to highlight that it is a journey to take it from seeing the fintechs as a competitor to a partner.
Right.
And it's not an easy adaptation for each and every business line within a big organization like banks. And also, and I think this can be one of the discussions we can take it on the panel also, because there is a perception about the ownership of the consumer. Who owns the customer at the end? Will it be the fintechs or the bank or whoever? And a very humble opinion, who owns the customer is no one. The customer will run.
The customer owns the customer.
Yeah, the customer owns the customer, and the customer is going to run after the value proposition, which is the most meets their needs. This is exactly what the customers will find, especially with the open market which we are living in now with the digitalization. After COVID, everyone is doing each and every service remotely. For the one who will be able to provide the value to the customer will own the customer during the transaction, not forever.
Yeah. Any other comments from the panelists on what was shared?
I do have another comment.
Yeah, go ahead. Please, yeah, we've got to make it interactive,
Hijack
guys.
the meeting, but I think on the customer ownership, I think this is where we, the whole discussion between banks and fintechs, that's the key aspect. Banks for too long has been the forefront of the customer experience. And throughout years, the evolution of the customer experience, whether through branches, direct sales channels, online banking, lately applications or online banking wrapped in an application. I think the coming period will witness each bank has to take one of two directions. It's either to continue fighting for the customer experience or surrender and just give the customer experience to the fintechs. The biggest problem with that direction, the second direction, is that banking on the consumer side will transform into a commodity. Let's assume, for example, that Islam decides...
You said a commodity?
A commodity, yes.
Yeah.
Islam, and I think building on what you mentioned this morning, Islam decides to go into lending, and I cannot compete with Islam because Islam has a great customer experience. What will happen is I'll decide that I'll surrender and I'll tell Islam, okay, Islam, I'll fund you. Islam will take the first round of funding from CIB because they have a great relationship. And then 6 months later down the road, Bank Misr will come in, I'll go and offer Islam a better funding rate, corridor plus 25 basis points. After that, another bank will come and offer corridor minus 25 basis points. It will move into being a commodity, but the whole customer experience sits with the fintech. In Bank Misr, we realized that, and we invoked two big projects back in 2019. One project, which is the digital transformation for Bank Misr itself, and another project, which is building a standalone digital bank, which is, I'm honored to be heading that project, just for the sake of fighting for the customer experience. We own the whole infrastructure, and it will be so sad that we are owning the infra, the applications, the regulations, the central bank interface. And in the end, a fintech comes, plays in a very thin layer, which is the customer experience, and owns the customer. Owning the customer doesn't mean the KYC that sits in my books. Owning the customer, it revolves around reading the customer behavior. Where do they go? Where do they spend? The data analytics behind it. It's not just the small definition of, because he's KYC'd in my bank, then I owe him. We just KYC him, by the way, and put him in the data warehouse. We do nothing with the customer. So I think there will be a huge value gone from the banks if we surrender and give the customer experience to the fintechs, and we just sit there with a huge infrastructure, and we're selling a commodity to the fintechs in the form of lending. That's just this is
Reactions to that? Mohamed, a reaction to that? You agree? Or Isla?
Yes, so 100% I agree with Behery, but I don't think, especially with fintechs, pricing is the thing that moves. It's mostly this readiness of technology that would make ops and would make our lives easier. And to be honest, I mean, definitely we've seen what Bank Misr has done over the years. I mean, in 2020, we started our acquiring relationship with Bank Misr, and we're very fortunate to be partners with the central bank initiatives on the POS. And actually, we wouldn't have on board tens of thousands of merchants along the two initiatives that took a year without what you're saying, without having the right rails to integrate with, having the strong operational capacity that would allow this to happen. So it's not only pricing. Definitely pricing is important, but I would put readiness from the bank and the collaboration from the bank and how the bank would mobilize in order to support a fintech on the commercial side and on the operational and the IT and tech side is, I think, something that can move the needle and make people switch in order to happen. So a big part, again, of our success was what happened inside the bank in order to allow us to be able to onboard all of those merchants. I think we went from 10,000 merchants to 100,000 merchants in less than 18 months. So if we don't have this operational capacity behind us at the bank, this wouldn't have been possible. So I agree with you 100% on building capacity to actually attract more partners and attract more players.
So what's the number, if a bank came to either of you and said, or any of you, and said, we're contemplating partnering, well, let me back up. So one of the truths of the financial ecosystem is we're all realizing it's an ecosystem, and that implicit in that is partnering, collaborating, potentially with perceived competitors, co-opetition, whatever you want to call it, which means partnering needs to become a competency of the bank, because historically, go back 20 years, that was not necessarily a competency of the bank. So if a bank came to you and said, we're contemplating partnering with a fintech to do X, Y, or Z, what would you both say, or anybody say, to the number one thing the bank should focus on, care about, emphasize, like terms of engagement, ways to enable, to decrease the trust timetable? Like what would Mohamed, what would the number one thing advice you would give? Or Lesley? Go ahead, Lesley. Yeah.
So at IFC, we're working across the region. So I have, I guess, a bit of the pleasure to see the good, the bad, and the really ugly of bank and fintech partnerships. And we're
Hey, Lesley, can you move your mic a little closer? That'd be great.
Sure. Is that better?
Yeah.
Okay. So we help the banks figure out their digital strategy. And quite often they come to us about this question on their fintech partnerships. And they know they should be doing it. And so they've done some iteration of something, but it hasn't worked. So how do we fix that? And we've seen things like they just bought the fintechs and gave them office space and said, why aren't they working? And you have to, you took them out of their environment, took away their innovation, and you just gave them money. That doesn't actually solve the problem. The other thing I've seen is that they try to partner with a fintech and they give them vendor forms to fill out. as if they're a software company that they're just going to pay quarterly. And again, we have to say, like, no, that's not a partnership. That's a vendor. It's a very different relationship. I totally agree about the customer experience and like keeping that in the forefront. But I think what carries these partnerships to scale and not cannibalizing each other is keeping the business case there and understanding who owns what portion of the pie and understanding that a smaller portion of a bigger pie is better for everyone rather than the whole portion of a smaller pie. We see banks saying, well, I can build that tech, so why do I need you? The Fintech saying the same thing, I can do this, so why do I need you? So to really come to the table and say, well, what is my value proposition? What is your value proposition? What are the rules of engagement? And what's the commercial model for it? Who's going to be paid for what? And making sure that that business model is like commensurate of the effort that you're putting in and the risk that you're taking. I think people look at the operational expenses and say like, okay, I need to make this much money per transaction or per customer or whatever, but they're not looking at the risk as much. And I think that long term, that's where these relationships start to break down.
Mohamed, one thing you would
Yeah, I wanted to highlight that we are still in Egypt in the test and learn phase. There is no number one which we can say this is the reason why I'm going behind the fintech. But it depends on the case. Sometimes it's the agility and speed to market. Sometimes it's the lack of technology, and this is why it's better to get a fintech who has the technology in order to fulfill the gap, and so on. It depends on the case of each and every use case. For the acceptance, for example, I think the number one need was how to go to these small merchants with a sales dialogue and a value proposition which has not been provided by the banks at that time. And this is where the fintechs came with agility in deploying the POS, faster process in onboarding the merchants, and making sure that instead of taking weeks until the merchant receive a POS, in 2-3 days the merchant is equipped with a POS. Here the agility, speed to market, for example, was number one reason of choice.
Islam, you have one thing from the fintech side?
Well, from the fintech side, I think the most important thing that we usually complain about is time. Because, I mean, time and the value of time is completely different between a very small company that only focuses on this compared to a bank that has a ton of things that maybe this is not the most important thing for the P&L of the bank, which is something we know for a fact that acceptance is not really what is driving profits and bottom line for banks. So we really, and this is something that we've seen a huge change in, is that the pace needs to be a bit faster. So coming to your question, what is the most important part? I think it's just having the right pace in order to be able to deploy something. Maybe we can fail, but if we did something, failed, learned, and then we reiterated on, I think this is a much better approach rather than waiting 4 months and maybe years to get it right from the start, because at the end of the day, you need to deploy and you need to deliver in order and get feedback from the market rather than just doing a lot of research and a lot of things. Because startups, especially ones that when before the fundraising and right now when we have a crunch in fundraising, runways are becoming less and less. So people are very keen to launch their products and monetize. They don't have the luxury of time.
Ahmed, you want to weigh in on fintech dynamics with clients and the loop between fintechs and banks?
So first off, I'm really honored to be speaking in this conference and thrilled to be amongst all those pioneers and professionals here in the market. To address your question, I believe that we need first to understand how this relation evolved from becoming a closed-loop solution provided and availed by fintechs till it went to an open-loop system. So if we go 20 years back, and look at when financial institutions were very solid, confident, and they were confident about not having any presence of other entities that would create a threat or disrupt actually the ecosystem. People's behavior as well was the same. So you wouldn't go and deposit your money in any other place other than a financial institution. And this remained the case. Fintechs were not taken seriously, although they were limited in number, but they were most closed-loop solutions. And they remained aside for some time. Fast forward until 2008, when the global economy crisis happened, this changed everything, because it really took this confidence and trust that people had in the financial institution to its lowest point. And this disappointment was actually the fuel for the fintech revolution. Adding to that as well, the technology of having smartphones, smartphone penetration, number of people who had smartphones is more than the number of people who are actually transacting in the financial system. So all those young coders came up with those fancy programs, applications, very low commission fee as well, that were very attractive, especially as we remember the disappointment and the trust is now at its lowest point, right? So people started to shift a little bit their attention to other solutions. Again, during that era, many of the fintechs were still closed-loop solutions. However, young generations started to take the risk of adopting this. Why especially young generations? Because they don't want to interact physically as older people with an agent at the bank. They just want with a click to execute the functions they want to do. We'll fast forward a little bit to 2014, and this is when regulators as well were conscious about the importance of this new player. So started paving the way actually for fintechs while securing all stakeholders, balancing fair competition as well, and especially mitigating risk for consumers. They started implementing those regulations that paved the way for the fintechs to grow even further. And now financial institutions and fintechs were a bit reluctant. How should we address this relationship? Should we compete or actually collaborate or compete? And each one of them found that the other one had something that they need. So if we look at, and echoing as well my colleagues, if we look at financial institutions, for example, incumbents, they grew because of mergers and acquisitions. And they had this IT infrastructure that, if not old, is not connected to each other's. Hence, to develop and take this digital transformation to where the consumer wants, it will require a lot of investment, it will require a lot of staff recruiting and education as well. Therefore, fintechs were fitting very well in this. On the other hand, fintechs not only wanted capital from financial institutions, but as well, they wanted speed to market. So they wanted to make use of the customer base that the banks had. And they wanted as well data to power their solutions and become even much efficient or more efficient than they are if they are a new entrant to a market. With this decision and having the right regulations, fintechs started to partner with financial institutions, and we started seeing the open loop solutions. And we, as Visa, we were monitoring. I mean, collaboration is in our DNA since 1958 when we started. So we were monitoring all of this, and we consider ourselves as a local partner to merchants, to financial institutions, fintechs, and government. So we started as well facilitating actually the interaction across all those entities to ensure that there will be credentials, which is a card, whether in a form of a physical form or digital form, to enable the acceptance and utilization of consumers for these solutions in more than 100 million merchants worldwide. Finally, we've been all hit by COVID as well, which took actually this to a newer level. It was an upgrade and an acceleration actually in the adoption. So not only young people and few of the older people would be using the solution, but we've as well seen this spreading across all ages, because you can no longer go to a branch or interact with anyone. So finally, I would say or conclude this, that the open loop and where we're standing now is where we should be going. I expect that we're going to be growing even further, and the future is going to be brighter.
I was going to ask whether you thought the whole dynamic was too fast, not fast enough, or just right. It sounds like just right.
It varies from a country to another.
Yeah.
I mean, yeah, you will see that in other countries, yes, it goes very quickly, and it is not dependent on whether this is a developed market or not, by the way. It all depends on the product, on the main factors, whether they are there for such growth or not, then you will find the right setup.
Sort of go off topic a little bit. If you guys could, and this is all about unleashing the power of digital banking, and obviously fintechs are a critical piece of that equation. If any of you could wave a magic wand to unleash more power, you know, like, what would you just, I'm talking at the highest level, like what would you say this country or the region needs to do to get more out of the potential of digital banking?
Can I go?
Yeah, sure.
Sure. Great question, Chris, and I think sitting in the digital banking area for the past almost 2 years, I think what we lack is a little bit of acceptance of failure and trial and error. That doesn't exist almost.
You said acceptance of failure?
Acceptance of failure, acceptance of doing a mistake.
Yeah.
Acceptance of, yes, we do have a sandbox, for example, in the CVE, and it's working well in the fintech space. But when it comes to the established organizations like Bank Misr, for example, you're not allowed to come close to doing mistakes. And I think that DNA in the age where we are in, it has to be present, that we have an appetite for failing and having a framework that is solid enough to accept these kind of failures and move on. And again, when I'm looking at failures, I'm not looking for scandals. I'm looking for acceptance of failures. Mistakes happen. For example, there was an application called White Sands, and I'm not sure how many people heard about it. It was backed, and the payout from that application, it was a pure Ponzi scheme, by the way. It was a pure Ponzi, and it was getting money from people, and actually the payout was through one of the wallets of one of the telecoms in Egypt. One day suddenly they just woke up, we just woke up, and the whole application disappeared from the app. Okay. So you have an area that's totally unregulated, where anybody can do an app in anywhere in the world and start claiming that this is a kind of an investment, and they play on the greed, and they play on high returns. And on the other hand, so that's totally unregulated. On the other hand, we have a regulation that is sitting there to regulate very much the market, but specifically the banks. Banks are willing today to take, to pour big investments, simply like what we're doing, for example, in the digital bank, putting billions of investments to open a new entity, to transform the market somewhere else. It will never be perfect. It will never be complete. We'll definitely do mistakes. Definitely the regulations will come out. Some gaps will appear. We'll go back to the drawing boards, redo the regulations. Our offerings will have gaps. This kind of attitude we need to start embedding into our organizations, because we have this saying in Egypt, was like every كل حاجة تمام يا ريس, which is everything is perfect.
Everything's perfect?
Everything is perfect. Every morning I have to go to my staff, and they come to me and they check in, and they have to tell me this word: everything is perfect. We have to change that attitude, which is.
You guys agree with that?
Do we have كل حاجة تمام يا ريس?
You guys agree with that?
It's everywhere. كل حاجة تمام يا ريس has to disappear. Okay?
That's got to be a tough way to live, man.
I used to tell my staff when they come and tell me in Bank Misr, كل حاجة تمام يا ريس, everything is perfect. I tell them you're a liar because nothing is perfect.
Nothing's perfect.
I hear someone is laughing. Maybe that was one of my staff members. This attitude has to change. And this, because كل حاجة تمام يا ريس or everything is perfect, it kills the idea of doing a mistake and accepting a mistake and celebrating a mistake. That's an own personal view, by the way.
That's a good, that's good.
For me, I think.
Wait, is this your magic wand? Are you waving a magic wand now?
Excuse me?
Yeah? You guys know what a magic wand is? Yeah? Okay, you're waving your wand?
Yes.
Okay, go ahead.
So the thing that I see would unlock huge potential in this transformation is investment in early stage fintechs, because access to capital and these investments, and we're very excited that the central bank and number of banks have pooled around $90 million in the Include Fund in order to invest in startups. This is something that's very exciting, because first, if you want to solve these challenges, you need great calibers, you need great minds. And saying that this is an area where you can monetize and you can leave your job at a investment bank or an operator or whatever, and you can open a company, and this startup, there will be backing for it, and you will be able to have capital to hire more people and invest in tech. This is something that is super important. Unfortunately, when we started the VC landscape was still in its infancy. I mean, not a lot of deals were happening. Definitely the last couple of years, we saw a lot of deals happening, but mostly not in the fintech space. Now we're seeing a lot of attention in the fintech space. Definitely the Include Fund would be a game changer for the industry, but I think more investments can unlock huge potential and can get more minds and more calibers to work with us on solving these issues.
Yeah. Anybody else want to wave a wand, make a wish?
Yeah, one simple comment which is coming also from, if anyone attended the presentation which has been done by Mr. Ahmed Nasr from Central Bank, he was talking about the tokenization. And he was saying that we are working against a plan, and one of the milestones is enable tokenization. And he didn't mention, in order to enable banks or fintechs to provide value-added services or new use cases, he mentioned to enable Apple Pay and Samsung Pay and similar to penetrate the market. And this is where the future of the digital payment and digital banking are heading also. There are new players who are going to be in the ecosystem, which needs to be considered, and seeing how the cooperation will look like with.
Reactions? Come on. Anybody? You got a point of view? No?
Yeah, I have one point actually. So if I may add, I think focusing on the right product can be a game changer in all of this. So yes, we need investment, yes, we need talents, etc. But if we look at two examples, for example, M-Pesa in Kenya, as per their central bank, more than 80% actually are financially included because of the solution. In Egypt, we have the wallets of the mobile network operators. People were very attracted by this peer-to-peer product that would facilitate lots of things for them, and the adoption rate, and people who are not even banked, don't have any financial literacy, decided to actually open a wallet to make use of that. So each rule has its exception, I would say, and the right product can be a magic in this.
No, I want to hear from Azza.
You want me to go? Okay. I'm going to be the controversial one and disagree with Ahmed. And I come bearing numbers, so I think my counter arguments should hold some water. So I brought my cheat sheets. So we recently did a study in Egypt that should be somewhat statistically relevant. It's not by any means a gold standard on financial inclusion data. But that being said, I think that there are some things that are a bit challenging for us to discuss when it comes to financial inclusion. You mentioned youth, which I find to be one of the most shocking things that we found out, that we estimate 81% of Egyptian youth are not using financial services. This is between 16 and 25. 34% say they're totally unaware of e-wallets, and 43% said they know but they're not likely to use it.
Say the last part again.
43%.
43%.
Yeah. Also for youth, 52% said that there isn't enough trust or digital literacy to be able to use it. So I think this is a bit contradictory to what we believe, that youth as early adopters are not typically the marginalized people within the digital banking sector. But I think in this context, they might be. And we certainly need to ask a lot more questions, I think, based on this first data, because it's completely against any hypothesis that we've been looking at. While I have the floor, I have a few more numbers.
Keep going.
Keep going? Okay. So, large gaps for youth, but also for women. We estimate that there's about a 10% gender gap, which is roughly what it's been for the last 10 years. So we're not seeing that closing, even with all of the new products, Fintechs, digital banks that are available. 80% of women-headed households do not use basic financial products, which we define as like an account or a wallet. 40% are totally unaware of what that even is. They can't define what an account means, 40%. Farmers are, not surprisingly, less likely to be using them than other types of MSMEs, 38 versus 48%. Generally, we find MSMEs to be well banked in Egypt compared to other markets. So there's good news in my data. And a lot of this speaks to trust. So good news also, maybe for the people in this room, is that people say they tend to trust banks more. Only 5% said that they trust MNOs more than banks. But 31% of women said they don't know who to trust, which I think is also an issue, meaning that they haven't been exposed, they haven't been educated, they haven't been aware, or maybe we're just mistrusting people. Is that what you're laughing at?
That's the one.
We tend to question a little more, maybe. But if they don't know who to trust, maybe there's room to help develop those perceptions. They haven't formed an opinion yet. And then, like I said, 52% of youth say they don't trust digital banks, or not digital banks, sorry, but digital banking products, I should define. While I'm on the trust aspect, I have another point, if it's okay. That we have some hypothesis with this data of like how we can address some of these trust issues. And one thing that comes to mind is this story that I heard once, and like I don't even know if it's true, but it like stuck with me for many years, that apparently Barclays in the 80s, they opened their first ATM in the UK. And they actually arbitrarily set business hours for this ATM. Not that the ATM couldn't be used after 5 p.m., but they were worried that if they allowed people to withdraw money at any time, that they would just withdraw their money and their bank balances would go down. But they soon learned that actually when you have trusted, easy access to your money, then people kept more money in the bank. When they had access to it 24 hours a day, They kept it in their bank account. They didn't need to keep as much on reserve. So I think, nowadays this makes sense to us. I rarely carry cash when I know I can just use my Visa card anywhere in the world, for example. Then I don't need to bring money. And I think if we can use that and think about how it's relevant for today in Egypt with these markets, the women, youth, et cetera, that are maybe not accessing services, what would help them build that trust that they can just get their money whenever they want? And I think one of the keys is around building a cash in and cash out network where you can just go at any time, anywhere, and withdraw money. They'd be a lot more likely to use it and to keep money in the system, in the payment system, when they know that they can just get it out. And I think that there's a lot of infrastructure that's already available that can be leveraged to do that. It doesn't have to be completely built from scratch, but it's definitely an opportunity, I think, to address some of these unbanked markets.
I think Sherif's getting his microphone ready.
Yeah, I'm really happy that Lesley is sharing these numbers, because that's the main reason actually why we're building a standalone digital bank with a different brand to cater for that untapped market. The great thing about a digital bank is that its serving model is very cheap. I can afford banks, or if I talk about coming from a finance background, profitability, the youth segments, they are not really profitable, and that is why we giving them the offerings that they need. It will be very expensive for the bank. The current infrastructure for the bank is not cheap enough to serve these kind of segments. And I think this is where we have a great opportunity in the digital bank, because simply our cost to serve is a fraction of the cost that we currently offer the same service in a conventional banks. When it comes to trust, when we did some customer research, in-depth customer research before invoking that huge investments we're in, or that huge investment, asking about the idea of having a digital bank in Egypt, people were so happy in the customer research across the different age brackets. 70%, by the way, is our customer base from youth. Very small savings, close to zero. They don't really have access to finance due to their lack of solid financials, but payments. So 70% of our customer base is planned to be from the youth. That is very cheap. And when we checked that customer research, people were so happy to have a digital bank, and they were so happy that, I don't have to go to a branch to open an account and all of that, hassle and legal paperwork. But when we told them, but by the way, there is no branches, they were really irritated. They still wanted a branch. Maybe as a matter of a small secure place, they want to touch something. We consider it as an airport, as if you are flying all the time with a plane. We are giving the customers the assurance is that there is an airport you can land in anytime you have an issue in your financials. And when it comes to trust, this is the core, regardless of the age brackets. And Islam and I were having a small discussion before the session on that area specifically. That trust doesn't come in the forefront of the youth. Actually, it does, based on scientific customer research. And the trust, it's not generated by just a very sexy customer experience or a very nice application or colors. It is established by establishing an established organization. It's an organization that people would trust to put their money in. Maybe I can treat the digital bank as a wallet in the beginning, put peanuts in it and spend it and put peanuts. But really, if you want to take digital banks into the real banking area, it has to create trust. And that trust happens by having an established organization. Very strong control functions, enterprise risk management framework that's very solid, giving people the trust that your money is safe regardless whether you have a branch or not.
Any reactions? I want to, Azza, ask you the question I asked earlier about magic wands and wishes as you think about unlocking the potential of digital banking. Like, what's your perspective on how, if you could do one thing, what would you do in this market?
So specifically on unleashing the potential of digital banking, I would say the more expedient or speedy rethinking of the regulatory environment, because this is what is holding back or slowing down the emergence of digital banking or a number of digital banks in the country. And there is a lot to learn because the wheel is up and running elsewhere in the world, and there's a lot to learn and take guidance from where this is happening elsewhere. Digital banking also, we can consider embedding, and this is a topic that we're quite passionate about, where innovative services come in, and especially AI and ML, artificial intelligence and machine learning powered services, new services. And AI and ML is definitely not something new. It's been with us for so many years, I would say even a couple of decades. What really disrupted the level of innovation that we're seeing in this domain, or the dynamics of what is new that is happening in this domain, is actually the power of cloud. So cloud made it quite inexpensive to have AI and ML powered services and to introduce and innovate, and also allowed these entities, whether we're talking about digital banks or fintechs, to fully capitalize on the power that AI and ML can inject in new service generation. Actually, I have a question on this particular front because I'm very curious to understand something. How many of your teams do you have data scientists and machine learning specialists driving the introduction of new services? And I will continue
on our team. Definitely, we have data scientists and we have product and growth functions, because this is something that I mean, in startups we don't have committees, so decision making comes from data. Because I mean, you can fight this forever, but I mean, at Paymob we usually use data in order to take decisions. And as Elbehery was saying, because the cost of failure is very small, so we do a lot of A/B testing, and we let the data speaks for itself in order to take decisions. But definitely on some of the things that we work with, because we work with huge amounts of data, we've definitely invested in a data science team, and definitely we have a performance team with the growth team that works with data in order to be able to, for example, consumer value management, and how can we foresee churn, how can we predict the receivables of a merchant in order to see if this is a viable merchant to be able to extend working capital finance to or not. These are all predictive models that we have built using the historical data that we have.
Thank you for that. And going back to what would be the magic ingredient, I would say, to accelerate first the presence of digital banks, and two, innovative services that we as consumers are interested in at the end of the day, and also what hits the top line and bottom line of these, I would say, entities where profitability is their objective function. Again, looking back on what is there globally, I'm not talking about Egypt, what is there to learn externally that can be a learning experience and something to inspire this sector, this very important sector that we're very proud of. Egypt, of course, the banking sector and the fintech sector is quite strategic and quite large. On machine learning and artificial intelligence specifically, examples are quite rich. And I was just talking in the morning to a colleague and an old friend of mine in HSBC who's responsible for small and medium enterprises. And we saw from the statistics that you shared that there is a very high failure rate in startups and in SMEs. And SMEs are, with no exaggeration, the pulsing heart of this country and in so many emerging markets. So if you look at what has been done elsewhere in the world, and I'm sure Egyptian banks do implement this, but that was implemented with speed, specifically because of the power of data and machine learning combined together. Rabobank in Holland, for example, shrunk the process of evaluating loan requests by SMEs from quite a lengthy period that takes a couple of weeks to only like 15 minutes. I consider this quite a dramatic advancement in the way a country like Holland, for example, addresses the requirements of SMEs with speed. Think of all the SMEs that do apply for loans in banks or in other non-bank financial institutions in Egypt, and think of where the power of data, of course, because that's the core of the analytics that happen, data, machine learning, takes the providers of these services in terms of innovating for new services, provisioning these services at very low cost, and provisioning these services with speed. And also, more importantly, and this is where, again, cloud provides scaling and agility to marginalized beneficiaries, whether we're talking about geographic areas where the traditional banking sector is not able to reach them, or segments of society that, for some odd reason, should have been beneficiaries of services of fintechs and the traditional banking sector and are not fully able to utilize these services. So again, the level of innovation, the level of new services, the speed by which these services are being introduced, hitting the bottom line and the top line of these institutions is very much now shaped by a force that we all use on a day in, day out basis, which is cloud. And this is where regulation either it becomes an enabler or to a certain extent becomes a stringent wall or a ceiling, a glass ceiling that may have an impact on stunting the level of innovation, growth, and also allowing these organizations to go global. Remember, there is something very unique about Egyptians. There are a couple of million Egyptians working abroad. I was one of them at so many points in my life. And if organizations, financial organizations in Egypt today do not address also with new instruments, new services, this population of a couple of million Egyptians working abroad with new instruments, new services, that where data also is very important in predicting the pattern and the services that they will be using. This is again a lost opportunity, because if these financial organizations and if these fintechs and if these institutions that are on Egyptian soil do not address the requisites of this very, very large, it's almost the country on its own, then because of how global this industry is and how you can actually get your, the services you're interested in, not just from Egypt, but from anywhere, this is a potential lost opportunity for this sector in Egypt. I was very happy today to see the graduates from the Banking Institute, and I'm sincerely hoping that part of the curriculum bankers do take is related to AI and ML. And it's not a deterring discipline, because we all learn statistics and we mostly graduates of finance. Embedding all of these new learning content in the way these graduates will be practicing and advising their institutions on is something very important. And hyperscale cloud providers such as ourselves, Amazon Web Services, we do provide and address the capabilities of various levels of capabilities in this sector. So there is a layer that anybody can actually use, and AI services that are very easy to plug and use by anyone. Actually don't require any prior knowledge of such services. And there is a middle layer for pre-trained models that can be picked and chosen from to help you with all the forecasting, the prediction, and again, understanding the consumption patterns of your users and being ahead of the curve in introducing services that they are likely to be using in the future, especially, for example, when we're talking about certain groups like youth and female-headed households or even farmers. And lastly, the machine learning experts that I'm hoping are embedded in each organization in our country that do build their own models, train them on real data, and then apply these trained models on the data they have to, again, predict and forecast and save cost and introduce new services. Plus, of course, that we all need to be aware that with the regulatory context in a country like Egypt, and it's evolving in quite good directions, there are ways in which you can, with the absence or the lack of clarity on data classification today, there are still ways that you can serve the banking sector and the financial sector with models. And again, this is where I turn to find where are the machine learning experts in the deep learning experts in our community, where data residency can be very well observed. And there are models where you train your models on the cloud and then bring them in and work on real data on premises. And again, there are a continuum of options that would allow this sector to provide us as consumers, because at the end of the day, we are the consumers of this sector, with cost-effective services, innovative services, and with our financial institutions with the profitability that they expect.
Excellent. Any reactions to that from anybody? Come on.
So I want to add to definitely what Dr. Azza was saying about speed and deployment. So definitely when COVID hit, we've seen a huge increase in our onboarding for merchants. So we've seen 450% increase in number of leads and people that are going digital and want our digital payment solution. And part of it was this movement of what we call the independent merchant. So right now we're seeing thousands of SMEs, whether they're offline, going online, or people who have started digital by using a marketplace, whether it's a food ordering marketplace or a commerce marketplace, and they want to have their own store digitally. They want to have their own thing because they don't want to be just part of a marketplace. They want to have access to their customers directly or offer experiences to their customers. And this wouldn't have been possible without the cloud, because part of the digitization part is that first you need a way to host all of your infrastructure. Definitely on-prem is extremely expensive for an SME or for someone who's just moving from their Facebook page to owning a store. Part of it is having a courier service, having a payment solution, having a website builder, which you have like international brands, and you have local people who are doing this part where they can build standard websites for SMEs. So I agree 100% with the speed and the cost reduction. So with mere hundreds of dollars, you can have an infrastructure that otherwise you should pay like hundreds of thousands of dollars in order to get. So 100% anybody who's just trying to work on the infrastructure for digitization, I think this is the time for it. And I believe there is a wave of SMEs and people, especially now, trying to improve their income. They're doing a lot of like business on the side, whether on Facebook or Instagram, that wants better service, and that will move to owning digital channels in order to increase their revenue and sales.
Sherif.
Yeah. I don't think there is nothing stopping any SME to use the cloud today. I knew a lot of customers, they manage their books via the hyperscale data centers. They are buying AWS, Google, or Azure Stack from Microsoft. I think the only thing that's, as we speak, it's not allowed to be on cloud is the customers' data by banks. And when we say cloud outside the boundaries of Egypt. It is allowed to have the data on soil in a cloud. And I think this is what we're doing currently with Delta. They are building a cloud, Delta Cloud, in the B6 building in Smart Village. So the concept itself, it's open for discussion with the central bank, and the central bank gave us that approval. The only thing, it just needs to be on soil. So hyperscale providers, I think like AWS, the opportunity is huge. If they build a data center on soil, I think the sky's the limit. But for SMEs, you don't have to be on soil. You can just place your data anywhere globally, but not the financial data. Not the financial data for banks and Paymob, for example. But if I'm a fintech, if I'm an SME, I have a shop, I have a factory, I can do whatever I want with my data. It just, anybody that gets a customer data cannot put it on cloud. Cannot. But if it is my data, nobody controls my data except for myself. So I have the freedom to place it on cloud. If I have a factory, I can put 100% of my business on the cloud.
Yeah, that is very common. SME is a private organization that's basically commercial in nature or non-commercial, like many of them maybe in the NGO sector, for example. But the example I was referring to was actually a bank conducting the assessment and qualification, including the risk assessment for loan applications by SMEs using the power of data analytics, because there is a data lake on cloud that allowed them basically to streamline the processes, have all the intelligence that is needed embedded in a model to qualify the SME in record time that is almost 50 minutes, 1-5.
I just want to comment here. In banks, 90% of our time, we manage risk, and 10% we do business. Placing the data outside Egypt has a huge risk on us. Simply, there is a big factor that we don't control, which is the political risk. I cannot afford one day to wake up and take all my customers' money, all the liabilities, all the deposits and saving accounts, and place it in a cloud outside Egypt. For some political risk, that money might be trapped outside, and I am liable in front of my customers to pay back their money. So this is a risk that we calculate, and we said, okay, I am not ready to take a political exposure simply because of some political issues that my money might be sitting in a cloud outside Egypt. So that issue now, it's really big, and it's not from a political perspective, but from a risk management perspective.
I also wanted to add something interesting that is also happening in Egypt and hopefully will benefit so much this sector. So the government of Egypt is quite ambitious in terms of investing in capacity building when it comes to artificial intelligence, machine learning, deep learning capabilities that will be sprinkled out and serve all sectors alike, including, of course, the financial services sector and the fintech sector. So MCIT, Ministry of Communication and Information Technology, partnered with Amazon Web Services, and the government actually invested in 2 cohorts, quite large cohorts in relative terms. Of the first cohort was machine learning specialists to graduate them, and then data scientist specialists to graduate them. And interestingly enough, this kind of investment toppled in a good way, the status of Egypt as a pool for certified machine learning specialists and now graduates of data science, not only in the region, but probably globally. This means that the market is very well ready now to totally exploit in a good way the capacity of these graduates, bring them into this, this very strategic sector and start using their learnings and knowledge. One, in data mining, again, working with data, huge data, getting what they have learned in terms of their hands-on experience in modeling and use case scenarios that can be applicable to the financial sector, and then start innovating. Again, there is a first mover advantage. This sector is very competitive. We know there is a certain number of banks and a certain number of fintechs. But again, think of us as consumers getting the service from elsewhere. The world, by the way, is lowering the barriers when it comes to trade and services. So I can well get, as a resident in Egypt, some of my services from outside the country. So the competition is quite intense. And this is where really this sector needs to take into consideration that now the barriers are there, the regulatory environment is as it is, but be well prepared for tomorrow, because in this very dynamic world, very competitive world that we're living in, this sector needs to be very well ready to compete, and to compete on the basis of innovation. And again, this is something that, again, this sector we're quite proud of. It's one of the largest and oldest financial sectors in the region. And we, again, as at the end of the day, as Egyptian citizens, we want to have this sector retain its leadership and supremacy, as has always been kind of sustained in our part of the world.
Yeah, I think no one can deny the power of data, artificial intelligence, cloud computing, all of this, but it depends on also meeting the needs of the country and the different sectors inside the country. Yeah. And also about the foundational layer of education and understanding those power, because there are a lot of decisions maybe is being taken, or direction of travel, which can be because of lack of certain knowledge about different areas. I think the main thing which we need to focus on is making sure that each and everyone understands exactly the benefit behind the different sectors which has been mentioned. What are the needs inside the country to meet those needs? And as Sherif was mentioning, there are some, let's call it national requirements, which needs also to be met in order to be able to get the benefit out of those. Once this has happened, I think that there is another opportunity which is going to be uncovered in the country when it comes to speed of serving not only SMEs, youth, and different segments of consumers, and also the power of using the data in order to be able to provide according to the consumer needs and according to the SME needs also, which will serve at the end also, Sherif, in mitigating the risk, because you are going to take your decision based on a real information and real data analysis, which will minimize the risk at the end. Combining all of those dots together and connecting the dots, I think when this happens, this is where we are going to see the outcome of cloud computing, AI, and data analysis.
Absolutely, and again, it's a quite a large continuum of options. At one extreme is full public cloud, and a lot of organizations in this sector has taken full advantage of that. And the other extreme, you will have on-prem, and for all the valid reasons, this is an option that, again, a lot of the organizations in this sector are currently opting for. But in between this continuum, you have so many options that you can fully exploit while also observing residency, sovereignty, and the setup of the regulatory environment in Egypt. Again, as I mentioned, I'm not a machine learning specialist, but I'm very passionate about this topic. And from the interaction with our various clients in Egypt that observe the regulatory context, a lot of the training of the machine learning models happens in the cloud on open data sets that are very relevant to a sector, be it the financial sector, be it the healthcare sector, agriculture, you can name it, because there are open data sets where you can train these models. And then bring them on-prem, on your real data, so that it helps you understand the data better, bring insights that are quite, because of the overwhelming size of data, is beyond the ability of human interaction, and then use this to innovate, predict, analyze, introduce new services, and so on and so forth. We are together in this journey until, inshallah, we reach the optimal station that is also very adaptive to the concerns, the unanswered questions, and the regulatory setup in Egypt.
Excellent. So we've received a number of questions from the audience, and some are directed to individuals, but most are general. So one of the questions is, what are the skills and capabilities required to drive digital banking? Banker or tech people? What is the mindset required? Background, et cetera? Anybody?
I can take that one.
Pardon me?
I can take that question.
Okay, sure, go ahead.
Actually, simply, that's my job for the past year and a half, hiring for the digital bank. And it should be a mix. For example, we cannot hire non-bankers doing a compliance job or a middle office function, which is really a control function, risk. But it should be a mix between bankers and non-bankers. If I look at the structure of the digital bank we're currently building, we're currently close to 200 people. 1/3 comes from the tech space. Less than 1/3 comes from the telecom space, and another 1/3 is coming from the banking space. It's a great combination, but cultural issues arises. So you have to blend all of these three cultures. From one end, the tech people and the telecom, they look at bankers as they are the dinosaurs and they are too slow and they don't understand the language that we talk. From the other end, the bankers look at these guys as they are reckless and they are not putting risk into consideration, and we're going to go bankrupt because of these guys. So the answer, to cut it short, it's a mix between both, but the management had to put a big effort in blending these two cultures together.
And is the culture set up to do that?
We're building a culture. That's one of the big benefits, that you have a new entity.
Right.
You are writing the rules, the unwritten rules. But it's hard, of course. Lots of trial and error, different pace. The non-bankers are a lot faster than the bankers. The bankers are very slow, but they are experienced when it comes to risk management. So you'll have to get everybody up the base into one speed and to speak the same language.
Any other reactions, Mohamed?
Yeah, actually, I can take this question because I joined the banking world only a few months back, coming from another background. And I can say that the future will require, as Sherif mentioned, the combination between banker and technology. Because it's no more that you are going to design a value proposition where you only think about the numbers and the financials. You need to take the consumer experience, the journey, the data, all of those aspects into consideration while providing the product or the end service to the consumer. And also it depends on the function. For example, when it comes to CFO, it needs to come from financial background. When it comes to controller, it needs to come from banking and controlling background. It depends on the function itself. Nothing which has been changed except when it comes to the product and consumer value proposition and the, let's say, the commercial part of the banking industry.
So I'm curious to know, in the United States, as traditional banks are trying to move into the more digital space, one of the issues they have, and I'm seeing this in South America as well, one of the issues they have is recruiting and convincing non-bank people to become bankers. Is that part of the dynamic? I mean, do you see that, or anybody see that?
Yeah. I have to convince people to leave a bank and join a company because we're not a bank yet.
Right.
So that's a tough job, to give them actually we're selling a dream to them that you're building a bank, one day you will be a bank, but it's a very hard story to sell, to convince someone from treasury, someone from risk, to leave their current role in a bank and come and to build it from scratch in a company. It's not a bank yet. So that's one hard angle. Another hard angle is the turnover in the tech space is around 30 to 40%. And this, we're not used to that in banking. In banking, we're used to 7, 10, 12% maximum. In tech space, it's 30, 40% in and out the door.
Annually?
Annually. And that's huge, because simply the talent in the market, as Islam was mentioning on data, for example, we don't have enough data engineers or data scientists. We don't have enough UX, UI. We don't have enough integration people. We don't have enough developers. Before in banking, we used to be competing with each other. I used to be, getting a compliance lady from a bank, and then, it was like, musical chairs. Now you're competing with fintechs, you're competing with telecos, you're competing with technology companies, you're competing with other banks doing digital factories and doing digital banks. So the competition now, it's very fierce with a lack of talent in the market.
Any other reaction?
A banker at the end is a human being.
Sorry, use your mic.
A banker at the end is a human being. He has a background of different knowledge area. At the end, it's but when it comes to controlling, maybe extra thinking about controls. But at the end, different backgrounds can lead to the banking knowledge also.
Can I also respond to that? Your question basically is around innovation. And by default, innovation is something that you don't know where it's going to be coming from. Nobody was expecting Uber, Airbnb, any of the new of the payment systems that evolved out of Africa, M-Pesa and so again, it is something unknown. So you really don't predict where is it going to be coming from, but you put in place the foundations that enable innovation. And by the way, innovation in banking can come not from a banker, nor from an IT person. It comes from an idea that will be triaged with a banker and enabled by an IT person. And again, putting the three together, or putting the environment for the three together to innovate and bring to life ideas that will eventually succeed is something that perhaps falls in our collective responsibility. Again, we need more and more of your organization, because they constitute a very important accelerator of economic dynamics. And you spoke in the morning about consumer behavior and credit. I believe there is also something very positive about it. And I speak from my perspective as a female, and because of female expenditure, I read an article that this is what keeps the world economy going. Again, in terms of consumption, again, your organizations are a very important contributor to economics dynamics in this country. So the more we enable, the more we allow innovation to flourish, the more we allow out of, let's say, 10, if 9 fail, then because of the law of probability, we need 1,000. And this 1,000 only will come from the basis of innovation, which are the accelerators, the innovation hubs, academia, industry collaborating together, all of these factors. So again, innovation is a question mark. Where it will come from, I would say because of the dynamics of how we're seeing innovation, not necessarily from the banking sector, not necessarily from IT, but a combination of both, with something in the middle, coming with a brilliant idea, this idea being captured at the right time and enabled This is what probably will drive disruption and the new wave of innovation that we're hopefully be seeing in Egypt.
So this question, fintechs help banks access an untapped market with little penetration. Are there studies on the size of that market? I guess that's the unbanked. And with all the support of banks and fintechs, the market needs proper financial digital literacy. Whose responsibility is that? Lesley. Also, there was a question related to the survey data that you shared, how big that sample was?
Yeah, it was, I think, 2,700 recipients, which should be enough, but maybe not when you start to disaggregate it. So I'm going to share the link, actually, of the report. But one thing I want to say, and I don't think that IFC is necessarily responsible. Maybe World Bank in general can be working more on literacy. But one thing that we saw in this study is that even though there's 100 new fintechs, we're not actually seeing evidence that it's addressing the unbanked market. It looks to us, at least from this initial data, that it's addressing the previously banked. So maybe they were underbanked, maybe they're getting better services now, but that it's not really leapfrogging to the totally unbanked market.
Okay. The panelists urge that digital products, we all agree to the idea of digital products, but we need to pay attention to mitigate the embedded risk. How do we best control the risk, basically? Or how do we invest in control as we invest in digital products? Does that make sense to me? Yeah, go ahead.
Again, that's part of what we're building. Implementing digital products does not mean that the back end is loose. It doesn't mean that you don't have a control framework. It doesn't mean you have a loose mandate and scale. It doesn't mean you have a loose control functions. It's a full-fledged bank, and I think one of the big aspects for the license granting to us will be almost 9 months to 1 year of due diligence by the Central Bank of Egypt. And that 9 months, I don't think they will be really interested in the sexy stuff that we're offering. They will be more interested in the cybersecurity. They will be more interested in the risk framework, how controlled we are, how, and again, we're not eliminating risks. It's a matter of you see the risks and you have mitigations for them, and you can control them rather than avoiding them. Nobody can avoid really the risk. So innovation, and again, this is a big dilemma between innovation and control, and this is one of the big balances we have to consider.
Any other reactions? No? This is not a question, it's just a funny statement. With Amazon and Google taking over the financial services market down the road, they capitalize on their brand equity, reach, and marketing. So I guess that's a way of saying probably.
It is.
Hold on. We have about 10 minutes left, and I think it's appropriate to actually end with these 2 questions. I totally agree with the concept of creating a culture that promotes how to manage mistakes. How could we transfer to this sort of culture, even if we're living in a culture that empowers fake perfectionism? Kind of a big question. Any answers?
Again, I'll take it.
Okay, but I want to hear from other people too.
All right.
No, Sherif, go ahead. But I think
other people.
This is a big cultural question. If you're living in a land of forced perfectionism, and we recognize unleashing the power of digital banking requires failure, requires doing things differently, thinking different kinds of people, how do you begin to get your head around, well, what tactically can you do to begin to move that perfectionist way?
I think we're moving away from the perfectionist to a purpose. Why
A purpose?
A purpose.
A crazy idea.
A crazy idea. Why we're doing this? Why did I leave my stable job in Bank Misr and come to that place? What am I building? What story am I creating? All of that, we put it into consideration while we are looking at the culture that we want to create for the people. Openness, freedom, full freedom, but freedom comes with a responsibility. So for example, so far, we don't have, I would say, a cost for travel policy. You have to spend $75 per day. We're just telling people so far, spend responsibly. And in the end, we're monitoring. I'm monitoring which hotel did he stay in. I'm monitoring, did they really abuse the meals? Did they really buy an appropriate meal, or is it really like, an excessive, lavish meal? So these kind of values you're trying to embed into the culture to balance between the creativity from one angle and the control from another angle.
That's great. Any other thoughts? Islam, you got one?
Well, for me, to be honest, I don't think any of the products we're using are perfect. So, and they're live and we're using it. So, to be honest, I think we need to embrace a culture of failure, as Elbehery was saying, but I mean, not in a scandalous kind of way, but I mean, doing very minor A/B testing and using data in order to see which of the paths you need to take. This is the way we do it. So we don't make big investments in something. We don't take 3 or 4 months to build something without having the right testing. And by testing, I mean a closed beta test where we can give this product to 20, 30, whatever the number that our product team would be sufficient to actually get the right data points in order to proceed. But my advice would be do something very fast, deploy it in a controlled fashion, get data, and then proceed accordingly. But waiting for a year or year and a half in order to deploy something, I mean, actually, the landscape around you would have changed. The data points that you started with would become obsolete. So that's why, and we have this culture of moving fast and culturally, and this is something very important. We're not in the culture of blaming people for failure. So I mean, because a lot of organizations, people are afraid because they're going to be blamed. You're the one who said this, you're the one who said that. Actually, part of our monthly meeting is that we discuss what are the things we failed at. And I want people to be completely proud and to feel safe that I said we want to go this way, and it has been proven not the right decision. So let's move on and see what is the right decision, because if you don't want to fail, that you'll never innovate. So because if you're doing something out of the box, if you're doing something that probability says it's not conventional to do so, then most probably you're going to fail. So if you want to have bold decisions, you need to accommodate and have a tolerance of failure. Again, not in the scandalous kind of failure, as Elbehery said, because again, we work in a very conservative, industry, and definitely scandalous failures aren't allowed.
Yeah.
There is something actually I'd like very much the industry to consider, and also decision makers at the government level, which is we're talking about data. So each bank or each financial institution has its own data and can do its analytics on. But the concept of open data sets that are the national level, that provide some insights to the patterns and preferences of the target groups that we're interested in. Let's say female-headed households. For example, CAPMAS, which is the Central Agency for Mobilization and Statistics, has data on everything concerning Egyptians, where they are, how they spend, on what they spend on, what is the seasonality in spending, everything related to expenditure, consumption, production. Having these data sets as open data, because this data by definition is public, you can go and buy it. But, and I'm very keen, and I've been talking to decision makers on this respect for some time, and they're quite interested in principle. And then having this open data serve multiple sectors, including the banking sector, because it will allow you to provide new instruments or new services that these data sets will provide you insights on. And I know a lot of the industry now is introducing new services that we never heard of before. So the bulk of the Egyptian households today the highest component of their expenditure, let's say, is on schooling. So what new instruments can be provided in relation to schooling, which is becoming quite a hefty expenditure component for every household in Egypt, regardless of its income level. And again, all of these insights can be well sieved out of open data sets. And again, the more the data sets become rich and your ability to train and retrain your models on these data sets, it will constitute to the probability of success of your organizations. So again, this is something that we can collectively work on, exciting decision makers to place as many data sets in machine readable format, because they are available today, but they're not machine readable.
Well said. So I want to wrap up with one last question, which is actually my question. And I'm going to put everybody on the spot in a row, in a sequence, starting with Islam, ending with Sherif. You ready?
Yeah, for me, everything is perfect.
And on that note, we can conclude. To my talk this morning about purpose, and you just brought up purpose. Islam, what do you think the purpose of a bank is? No right or wrong, because there ain't no perfection.
So, I mean, bank by nature, it's a marketplace for deposits and lending. So the purpose is that they maximize the number of points where they get deposits and try to funnel these deposits in, hopefully, projects that would actually add economic value. And
Okay, cool.
that's like the textbook kind of
Like the textbook?
answer to what...
That's a good answer. Mohamed, your turn. Like if you were inventing a bank today, what would its purpose be?
Marketplace.
I think that it's very... making money, of course, is the main purpose.
Making money?
Right?
Attaboy.
There are a lot of, actually, banks are serving as intermediator for the consumer, between the consumer and the government when it comes to lending, between investment where you don't want to know where you want to invest your money. The bank can do this on behalf of you as a consumer. When it comes to providing you access of finance, this is also where the bank needs to serve the customers. Maybe all what I said now is not well known in Egypt yet about the banking purpose, and this is where consumers, and this is where the central bank has been also trying to push financial inclusion much during the past years. And what's on top of head of consumers now is the purpose of the bank is making money and take from me money. While the main purpose of the bank is to support people to live and deal best with the money and with finance, and being able to manage their income in the best way so that they can enhance their living style and their living in general. I think this is the main purpose of the bank, and this is where the banks are heading to worldwide and also in Egypt. And I'm not talking about consumer per se. I'm talking about consumer, SMEs, corporates, and so on.
Great. Well done. Lesley.
I'd say that the purpose of a bank is to formalize payments within the economy and to provide a safe haven for funds when those payments are needed. And with that said, a bank doesn't have to be a bank.
It doesn't have to be a bank to realize that outcome.
Yeah.
It's a radical statement.
Sorry?
I said that's a radical statement.
A radical statement.
Azza, what's your answer?
So the bank, as we've all learned when we're young students and as adults in the professional world, is a key ingredient in economic activity. This is where I see banks are a key, not a catalyst, but a key component of economic dynamics. And the health of the banking sector, again, reflects the health of an economy. And this is where our banking sector has an incredibly important role to play in Egypt's economy and perhaps even the region's economic dynamics. And this would be my viewpoint as a professional on how we see the banking sector.
Yeah. Ahmed?
Well, if I look at it very specifically, that what is the purpose of a bank from the eyes of the bankiers, I would say it's pure making revenue. However, in order to reach this purpose, there are many things that you need to do, many things that you need to develop that would actually reflect positively on all stakeholders within the market.
Okay. And last but not least.
Yeah, for me, it's a seamless tool in the hand of the customer to do whatever. And whatever here I mean, and again, I'm moving away from being just offering financial services. As Islam said, I can be a marketplace, and I don't have to give the customer the feeling that you'll have to worry to do anything. When I wake up in the morning, I get into my car, I'm not worried about the mechanics behind the car starting or not. It's a tool that takes me from one place to another. Banks today need to get into that space. It's a tool in the hands of the consumer to do whatever, to do payments, access to finance, save, invest, insure. For me, that's the purpose of a bank.
That's the purpose. All right. Well, on that note, let's give them a round of applause. Thank you guys for a great job. Appreciate you coming. Off we go.